Hi everyone, welcome to Morning Trade with Money Control. I'm Karunya Rao. We've got lots on our plate today, so let's get started with the global setup where we saw a comeback rally. S&P 500 on Friday finished its best day since 4th of May, while the Nasdaq posted its strongest one-day gain since November 2020. Nasdaq jumped nearly 4% on Friday. S&P 500, in fact, was prevented from tumbling into a bear market territory. It settled about 2.4% higher, and Dow gained 466 points by the time it shut shop. EU handover was also quite strong, with all major indices ending more than 2% higher. Stocks in Asia, however, right now trading mixed. Shanghai slipped into the red as the country has reported a drop in retail sales and industrial production in April, far worse than analysts had expected. However, having said that, SGX Nifty is indicating a positive start for the Indian markets. Right now, it's up by about 0.2%. But back home, there's a big story to track today. So let's get to that. Adani Group is all set to acquire Holcim's businesses in India, Ambuja Cements and ACC Limited. Now, the deal values Holcim's stake and open offer consideration for Ambuja Cements and ACC at about $10.5 billion, making this the largest ever acquisition by Adani and India's largest ever M&A transaction in the infrastructure and materials space. Adani will now become India's second largest cement manufacturer with a capacity of about 70 metric tons per annum. That's MTPA as we call it in the sector. This is according to the statement given out by the company. Now, Moneycontrol reported this story shortly before the official announcement that came by last night that Holcim would pick a winner and Adani is the front runner. In fact, my colleague Ashwin Mohan, who broke the story, joins us now to get us more contours of the deal. Ashwin, good morning. Newsbreak confirmed, so congratulations on that. Tell us about this big buy that Adani has made and how it impacts investors, more importantly, of Ambuja and ACC.
Good morning, Karunya. $10.5 billion, you hit the nail on the head. It is indeed the biggest acquisition ever in the history of the Adani Group, and also in terms of the sector, which is the infrastructure sector and the material space. It is the largest ever M&A transaction in the history of India Inc. Clearly a busy Sunday evening for the media and the entire analyst community. The announcement coming in late last evening, confirming the Moneycontrol news break a few hours earlier. Now, Karunya, if you have to take a look at this deal is mammoth because of the sheer size and scale. $10.5 billion is the entire valuation of this deal, and this includes, the component for the open offer. So if you look at the open offer price, it's 385 rupees per share for Ambuja Cements, and it's about 2,300 rupees per share for ACC. That's about a 7 to 8% premium over the current market price. So yes, the Adanis have paid a premium as far as this deal is concerned. In terms of the all-important metric in the cement sector, you look at the EBITDA per ton. So that's coming into around $196 per ton on a standalone basis for Ambuja and around $118 per ton for ACC. That's according to an estimate by brokerage house CLSA. So clearly the Adanis have been aggressively chasing this asset, have been pursuing this asset for a while, and they have gone ahead and paid top dollar as far as this deal is concerned. Now, what's interesting is that even though Adani Karunya had set up a cement subsidiary some time back, which is Adani Cement Limited, this deal has not been routed through any of the listed entities of the Adani conglomerate. What has been done is that a special purpose offshore vehicle has been set up, and through that, this deal has been struck. So that's the buying entity. There's no clarity on whether or not at a later stage, any of the listed entities of the Adani Group may in fact play a role as far as the cement operation is concerned. In terms of funding, no details on the funding yet, but we do understand from our sources that Barclays Bank, Standard Chartered Bank and Deutsche Bank had helped Adani as far as the funding aspect is concerned. A huge deal coming in for Adani, purely because if you look at the entire cement buyout, Adani is now a huge gorilla of a conglomerate. It has presence in logistics, it has presence in ports, it has presence in power, it has presence in energy. So what this deal will do is that this will act as a catalyst for all its infra presence, and it will lead to a more integrated conglomerate. Because at the end of the day, cement is a key raw material for the infrastructure business. So therefore, the cement, the entire cement component will feed into the other entities of the Adani group, thereby creating a lot of synergies. You are right. The entire cement capacity that they will pick up is around 70 million tons per annum. And that, of course, makes it by one big swoop, the single, the second largest cement player in the country, sniffing behind the heels of Ultratech, which of course is still far ahead at 120 million tons per annum, Karunya.
Ashwin, but the big question right now that everybody is asking is that why has Holcim decided to exit India? And how will this deal essentially shake up the Indian cement space? Because the demand scenario hasn't been very resilient.
Karunya, a very, very important question over there. The entire industry was shocked when news broke about Holcim looking to exit its cement operations. Why? Because Holcim, the Switzerland headquartered conglomerate, is the world's largest cement maker. Now, before it decided to exit the Indian cement market, it had also exited a few other markets, chiefly being, the market in Brazil. India is the world's second largest cement market. Though, there is a lot of penetration, there is still a lot of scope for penetration. It is the world's second largest cement market. So therefore, imagine you have an MNC, the world's largest cement player, deciding to exit two of its biggest markets back to back. Why? Well, there's only one word to answer that question, and that one word is the buzzword in global cement circles these days, Karunya, and that word is sustainability, ESG. What Holcim is trying to do is that it's trying to become a less carbon-intensive group, because cement, of course, at the end of the day, is a carbon-intense industry. So it's trying to become a less carbon-intensive group, and it's trying to move into more environment-friendly construction materials and building materials. So that is the reason why it is looking at exiting India. And of course, one also must keep in mind that India has now become a very crowded market in the cement space. So who knows, maybe Holcim is looking at other regions where it could get better returns and where there could be lesser competition. That's as far as Holcim is concerned. Now, coming back to the entire cement sector, the entire sweepstakes in the cement sector have changed. Overnight, with one deal, Adani has come out of nowhere and become the number 2 player in the market with 70 million tons per annum. Ultratech, as I pointed out, is 120 million tons per annum. There are two other players also we need to point out that were interested in this asset. One was JSW, they lost out, and one was also Ultratech, which lost out. Imagine Ultratech now really has to go back to the drawing board and see how it can sort of, absorb the impact of Adani suddenly becoming number 2. We'll have to wait and watch to see whether Ultratech goes ahead and tries to acquire any more cement assets. It's already at 120 million tons per annum. So the Competition Commission of Angle India always comes in. There is a CC angle that always comes in. But at the end of the day, you are looking at a sector wherein a new player is coming. We'll have to wait and watch to see how this will impact pricing. Gautam Adani has been quoted as saying that they're looking to double the cement capacity in the next 5 years. So from 70 million tons per annum, they are planning to go up to 140 million tons per annum, and that would eclipse Ultratech if it sticks to around 120 million tons per annum. So, the stage is set for a big, big battle between two big conglomerates, the Birla Group and the Adani Group. And of course, mouth-watering battle expected in the days ahead. We'll have to wait and watch to see how the street responds to this mega deal. Karunya, back to you.
Absolutely. Lots of action happening, lots of interest, and today definitely ACC Ambuja will be the cynosure of all eyes. Ashwin, thank you so much for breaking this down for us. Let's talk technicals. Then Rajesh Palviya is joining us now to help our viewers out, understand how the trade setup looks like, and most importantly, address your queries. So keep sending it on our YouTube feed as well. Rajesh, thank you so much for joining in. A very good morning to you. And looks like we're off to a positive start today. We may not have been able to sustain the uptick on Friday, but can we do it now? Can we do it today?
Good morning, Karunya. Looking at the global cues, looking at the SGS Nifty, yes, we will be, opening on the positive note. But still, if we analyze the overall setup for the market, still we are in the weak zone. Looking at the short to medium term setup, both the indices now trading below their long-term moving averages. So we have seen death cross also 50-day moving average has given a negative crossover to 200-day moving average. So which is negative development on the technical front for both the indices. So which indicates that until unless Nifty not able to cross above 16,400, whatever pullback we are going to witness, it will meet to again supply pressure on the higher side. So looking at the intraday sort of trading setup, we believe that if we open around 15,850, 15,900, which is likely to again act as a resistance area. So for intraday, the strong resistance is around 15,950. If we able to cross that level, then some follow-up buying or some sustained buying we can witness in the market in the intraday basis. So as of now, 15,950 is likely to act as a steep resistance for intraday basis. If we talk about Bank Nifty, so Bank Nifty is showing underperformance compared to Nifty now. Almost during the week, we have seen more than 4.5% corrective action for this month, almost 8.5% correction for the Bank Nifty. And now Bank Nifty is trading below 34,000 level, and looking at the setup, the immediate resistance for the Bank Nifty on the higher side is at around 33,650 level. Until unless we will not be able to cross these level, whatever pullback will come in the Bank Nifty also will meet to the supply pressure. So both the indices, looking at the setup for short to medium term perspective, is on the negative side. So strategy is sell on rise would be there. We will be watching Nifty level. If it comes near to 15,950, one can go short with stop loss of 16,050. Again, we feel that Nifty may again go down further towards 15,700, even 15,650 during the day also. And for Bank Nifty also, if Bank Nifty comes near to 33,400, 33,500 is a shorting opportunity with stop loss of 33,650. So overall scenario is negative. Pullback should be used as a shorting opportunity in the market.
Okay, all right. I hope viewers are taking note of that. But today ACC and Ambuja, as we were discussing earlier on in the show, this is definitely going to hog a fair amount of limelight. In fact, we've already started receiving questions on these two as well. Abhijit Roy has written to us on Ambuja Cement, whether it's a buy, sell or hold. And if you could share your view on the current cement stocks, listed players as well. So what is your reading of the technicals of Ambuja as well as ACC?
So yeah, if we compare both the stock Ambuja and ACC, so Ambuja setup is looking quite promising, and if we analyze the near-term setup also, stock is almost trading near to 20-day moving average, which is considered to be positive side on the near-term basis. Even on the shorter-term time frame also, stock since last 3-4 weeks is consolidating in very narrow range. And looking at the setup, if the stock manages to cross about 365, 368 level, then possibly it may see further more uptick towards 380, 390 zone also. So overall setup for Ambuja is on the positive side, but if we compare with the ACC setup, it's a little weak in terms of technical setup. But on the higher side, 2150 to 2175 is the resistance area for intraday point of view. If ACC managed to cross about 2175 level, then some short covering action can be witnessed in the stock towards 2250 also. So after opening, we need to watch this stock. 2175 is the key level for ACC. If that level taken out on the higher side, then possibly short covering action can be witnessed in the ACC also.
Okay. Let's also put the spotlight on Nazara Technologies. As promised, we want to understand the technicals and help our viewers understand as well. It saw a solid 14% uptick on Friday. 1254 is where it shut shop. But if we look at the numbers, for the quarter gone by, for the March 2022 quarter, the profits fell 71%, coming in at close to 5 crores. Revenue was down 6% QOQ as well. However, they did announce a 1:1 bonus share for its shareholders. So lots of developments coming in on the fundamental side. But how is it looking on the technicals? Will this kind of rally, the surge that it saw on Friday, will it continue? In fact, we have a question also coming in from Jami Prasant, who has 100 shares of Nazara bought at 1650 and wants to know if it's going to hit those levels or recover to those levels anytime soon.
So currently, if we analyze the larger time frame, stock has given a breakdown on the monthly setup also. So stock has given a breakdown of its March 21 support area also. So looking at the larger time frame, the stock is in weak zone. Yes, after witnessing continuous downfall on the larger time frame, stock has shown some bit of recovery in the last trading session, but still looking at the near term as well as short term setup, the stock is in the weak zone. And if at all some more pullback continues, that stock is likely to witness a major resistance around 1400 level, which is likely to act as a major resistance for this pullback action. So overall trend is negative. Though the investor is holding the stock from 2000 level, so I feel that it will take time to recover around those levels, because overall setup is weak for the stock. And my advice would be, if stock comes near to 1400 level, then it's an opportunity to again exit from the stock, because we feel that again stock will continue its downward momentum, because overall long-term setup is also in the negative zone, and we feel that furthermore lower side level we can see if it's stock break down below 1180 level.
Right. Okay. What about Bharat Forge? They will be rolling out their earnings today. But if we look at the stock, in the last 6 months, it has been in that range of about 120, 150 rupees up or down. Perhaps somewhere between 750 to 600 levels is where it has essentially been hovering without any meaningful action either way. So talk to us about how it's likely to perform in the coming weeks, coming days.
So Bharat Forge, yeah, you rightly point out that stock is still in the range bound kind of setup, and now stock is near to its multiple support zone of 595 to 600. It is a multiple support zone on the monthly as well as on the weekly chart. So looking at the setup, 600 is very important support area. If stock continues to hold above this level post earnings also, then possibly stock should give some more pullback towards 675, which is next immediate resistance area on the higher side. So overall setup looks to be on the consolidation side only. The major breakout level on the higher side would be at around 700, 705 level. So till the stock not crosses that level on the higher side, it is likely to remain in the range bound trade. 595 to 705 is the broad range. If it comes near to 600 level, is a buying opportunity with strict stop loss of 590. On the higher side, 675 is the zone where one can book profits again.
Okay. The third, stock that we want to put the spotlight on is Maruti Suzuki. There's some corporate news there. They're planning 11,000 crore first phase investment for a new plant, the site for which they have identified in Haryana, and it'll have a capacity of about 2.5 lakh vehicles per year. And this is going to be or likely to be commissioned by 2025. So big corporate development happening there, a big news of scaling up their capacity, and such a news has come after a long time, especially from these bigger OEMs where they're looking to expand their capacity with such a phenomenal amount of investment. Maruti, Rajesh, had slipped to around 6,700 levels early on in March. Yes, it has slowly, steadily recovered from those levels, but still hasn't done too much for its investors. 7,100 levels is where it has been, trading at up or down 25 odd rupees. Talk to us about how the technicals look and what should investors do if they are planning to invest here.
So, Palviya, it's almost 1,200 rupees range, which we have seen for Maruti since last 1 year kind of time frame. So again and again, stock is getting supported around 6,700, 6,800 level, and again showing some bounce back action from those level. So again, risk to reward point of view, again stock is available near to its multiple support zone of 6,700, 6,800 level. So if at all any due to some volatility, if stock comes near to those level, is a buying opportunity for short-term trading point of view as well as for investment point of view. So those who are looking for the investment point of view, it's an opportunity, because if we look at the monthly time frame as well as weekly time frame, stock is available near to its major support area of 6,700, 6,800 level. So any dip towards 7,000, 6,900 is a buying opportunity. Keep stop loss of 6,650. And again, we feel that looking at the overall setup for the Maruti, we feel that that stock has potential again to give some pullback action towards 7,500, 7,600 going forward. So trading point of view, yes, wait for some dips towards 6900, 6950 level is a buying opportunity. Keep a stop loss of 6800. And purely trading point of view, we expect that target of 7300, 7400. But for investment, it's a good opportunity to accumulate this stock. And again, we feel that, looking at the larger time frame, stock has potential again to manage cross above its 8,000, 8,200 level, which is a major breakout level on the long-term chart also. So once that breakout happens, then the stock will resume its uptrend and maybe we can see further more higher level. So for investor as well as for trader, it's an opportunity to buy this stock in the dips.
Okay, Rajesh, we have time for one quick query. Shubham Srivastav is writing to us and he wants your view on HCL Technologies or Tech Mahindra, which is a better choice for the long haul. Tech Mahindra delivered their numbers on Friday. It's been a good set. Bottom line has beaten street expectations by quite a bit. Talk to us about the technicals, HCL and Tech M.
So, looking at the setup for both the stocks in downtrend, and we have witnessed, a series of, lower top, lower bottom formation on the daily time frame. Looking at the setup, HCL Tech is showing, some bit of, buying support, buying action at lower level, and stock is trying to form some, support around 1040, 1030 zone. So if we compare both the stock, my preferred choice would be on HCL Tech. If the stock continues to hold above 1030, 1040 level, then possibly some pullback action we can see in this stock towards 1080 to 1100 zone. So for trading point of view, HCL Tech would be my preferred pick. But on the Tech Mahindra, if we analyze the setup, stock is still in the weak zone, and looking at the setup, my belief is that if stock breaks below 1180, then it may continue its down move towards 1140, 1130 level also. For reversal, stock needs to cross above 1300 level, which is very key important resistance area on the higher side. If stock manages to cross above 1300 level, then possibly some bit of reversal sign we can see on the near term as well as on the short term. So in compared to both the stock, my preferred pick would be HCL Tech on the long side.
Okay then. What about your personal picks? What kind of stocks would you like to recommend to our viewers?
So currently we are focusing on the automobile space, and Mahindra setup is looking quite positive, and despite of huge volatility as well as downtick, we feel that Mahindra one can buy at the current level for upside target of 930. One can keep stop loss of 870. Another stock is Gujarat Gas. We have seen a significant run up in the last week for Gujarat Gas. The kind of setup we have witnessed, we're seeing on the weekly setup, we feel that this stock will continue its upward momentum towards 590. So one can buy Gujarat Gas also for with the stop loss of 552. The space which we feel that can show further weakness from the current level, that is mid cap IT and Birla Soft setup is looking weak. We have seen that series of lower top lower bottom formation. The stock has given a major breakdown on weekly chart. So looking at the setup, we feel that Birla Soft can go down further. So one can short Birla Soft future with the stop loss of 372 for lower target of 345.
All right, so buy on M&M, Gujarat Gas, sell on Birla Soft. Rajesh, it's always a pleasure chatting with you. I hope we could address more queries, but unfortunately we're running out of time, so we're going to wrap it up real quick. But stay tuned to Money Control. A lot of exclusives coming up your way as well. We just spoke to Ashwin about the big story of the day. But my colleague, Mahalakshmi, has had a brilliant conversation with Shankar Sharma, which we will play out at 11 a.m. today live. So yes, stay tuned for that. But for now, it's time for Markets with Santo and CJ. Thank you so much for tuning in. See you tomorrow morning.